Hi everyone, welcome back to this week Weekly Market Update. I understand it's been a month since my last video. Basically, like I mentioned, I went for a holiday trip. So I'm back after a refresh trip and hopefully can continue to provide you guys more update on the market and things to watch out for as well. So without further ado, let's see what is happening on the market based on the overall major indexes and then go into particular stocks that I find there's some potentials and also to review one or two of the counter that I mentioned previously. So as you can see from last Friday market, right, uh, it's a mixtures, but the good thing is let's say you're on the down, on the long bias on the bullish side, it's a 10 straight positive day, longest rally since 2017. All right, you will be very doubtful, puzzled how come the market is getting so strong whereby the inflation rate is still there, the worry of the inflation rate, the worry of the rate hike, and economy is not that well ultimately, right? How come the stock market continue to go higher? All right, we can see that there are a couple of things. Dow went higher, S&P also end as a positive, while Nasdaq fell 0.22% on last Friday itself. All right, mainly I feel it's because on the coming week, basically on the next week itself, all right, on the coming week, we know there is the economy calendar reporting. One of the focus is actually on this uh, Fed going to announce on the rate hike. All right, let's take a look. Yes, there's a Fed balance sheet. Let me see. I think there's a next week or this week. I can't remember. Oh, okay. So it's the following week. Next week itself, that is FOMC interest rate decisions. I think this is what everyone is eyeing on it. All right, next week. So basically, right, as we know, this rate interest rate decisions most likely going to hike another 25 basis point. All right. So what's next after that? I believe right now we are actually entering into the almost 1 month after the second half of the year. All right, during when we step into the June, the second half of the year, I think Fed did mention they're going to increase two more interest rate hike until the end of 2023. So next month will be one. Subsequently, everyone know that the rate hike may stop. All right, and then if rate hike stop, what is the next outcome is most likely to reduce the rate hike. Correct or not? After increase is definitely stagnant, then reduce. So I think market actually play a forward game, which is always they do so, playing a forward game, thinking that, oh, no more rate hike, which is good for the stock market, right? Because the debt of the company itself is not going to be so stressful on paying high interest loan on their debt itself. So and that what caused the market to rally over the past few weeks or past 1 or 2 weeks because everyone project up front. Correct or not? And also not only on that, as we know that we are stepping into the earning calendars, earning season starting from last week. We can see that from the bank itself, everything is doing positively. Um, from Morgan Stanley, from Bank of America, uh, most of the company is performing well, even for Tesla itself. But one slight takeaway is that from Tesla itself, even though earning is good, but the stock came down on the past few days. All right, we'll review the chart later as well. So not only on that, let's see. So what does the news came out? So there's also a large volume of index and also stock options expired on Friday itself, causing a lot of volatility on last Friday. All right, so corporate earnings has been a mixture so far. 75% of S&P 500 company reported that exceed the analyst expectations, and that is what caused the market to go higher, right? So not only on that, let's take a look on what caused the US stock face the rarely face Fed test. What does it mean? As I mentioned, next week is actually the interest rate decisions, right? So right now, stock start to pause after a few days of rally because everyone is waiting what Fed is going to deliver. But of course, if let's say suddenly Fed said, wow, the market is doing very, very good, they decided to have more rate hike, and that may cause the market to go downturn. Otherwise, if Fed respect on what they say previously, no longer have much rate hike, then I think we may see another leg of positively. Alright, so at current situation, it's very sensitive to what going to happen on next week. So be cautious if you're holding if you didn't manage well on your portfolio itself, if you do not have a good, nice hedging, then be cautious. Don't be one-side buyers. It might burn you badly. All right. So many investors expect higher interest rate to bring on the recession that will further hurt the stock after 2022 sharp decline. So, but like I mentioned, right now we are actually at the last stage of the interest rate hike already, and that is why everyone start to ignore it. All right, start to think that there's hope, good sign. Inflation will continue cooling. Eliminating the Fed, leave the borrowing cost. So this caused the market to go higher. That is my take on what is happening on the last few weeks, on the bullish of the market itself. All right, so uh, let's go directly to the chart itself. So as you can see from Dow Jones, right, this is Dow Jones Index. On last Friday, we can see, or last week, we can see there's a bullish candle breakout. All right, so this has beaten resistance itself. All right, it's always resisted at 34,300. Okay, so as you can see that I came back 1 month after my last video update. So usually I will tend to remove all my previous charting to have a clear mindset where I'm looking at, not to be hindering by what I have been drawn previously. So to see from the overview picture, firstly we can see it's uptrend, very nice uptrend. Second thing, we can see that the market has been resisted at 34,300 or 400 since April. All right, since May, start of May has been resisted until now, July, it break out. So this breakout can be we can take it a serious breakout, not a false alarm one. Basically, this is on a weekly candle, weekly chart, unless you're going to show me a engulfing candle on next week itself, and then we can see that. All right, unless you're going to show me an engulfing candle by next week itself. Otherwise, we should ride with the trend itself. I see more upside. So buyers on the more upside at the moment, it might have some pullback. So we may see 36,400, or we may see a new high in Dow Jones until the end of 2023. All right, so we shall see any fluctuation between, but like I said, fall below 34,300 will not be a good sign on the weekly chart because it's an engulfing. So if that's the case, let me just write today is 22nd July 2023. All right, weekly chart. If candle break below 34,300, not a good sign, and may see more downside. Otherwise, right with the trend, we shall see 36.4 or new high making in DJI. Alright, so this is just a note for me to take note of, because I just came back to the market. Even though I went to holiday, doesn't mean I'm not monitoring. I'm still monitoring, just that I did the update. So this is the big picture on the weekly basis itself. Looking to the day chart, we can see that the price seems like being resisted at 35,500. As you can see, used to be some hovering price around this few area, right? So this candle, like I mentioned, everyone is waiting for what's happening on next week for Fed itself. All right, so for people who like to take a higher risk, don't believe on the riding of the trend, wanted to short, remember 35,500 will be your first stop loss level. All right, otherwise we can do some minor pullback, anti-trend trading. All right, so let's write on some short-term basis. 22nd July 2023 daily chart. Minor resistance at 35,500. Okay, waiting for Fed decisions next week. Alright, SL 35,500. If you want to take short trade on the downside. Alright, so this is what I am looking at. If you want to do a day trading, this is what you should be paying attention to as well. Alright, so let me just delete all and then okay. So otherwise, on the weekly basis, I'm more on the buyers on the upside. On the daily basis, I'm buyers on the downside till what the Fed decide. Okay, so this is how you look at for Dow Jones on the coming next week itself. Okay, let me just delete all these. Okay, so I will save on this chart, and then we will move on to Nasdaq. When I came back after a long break, right, usually I would like to look at the major index and see where are we right now before we make a decision on individual stocks or what is the decisions that we're going to take on as well. So for Nasdaq, we can see that last Friday it closed on the red, right? Last Friday it closed on the red. I think most likely it's caused by Tesla. We can see that Tesla announced a good earnings, right? But then the stock came down. So as we can see that most of the technology is actually really at the oversold territory. All right, especially like for Nvidia, for Tesla, for even Meta, Facebook, which I'm going to talk about it later as well. So I think profit taking is along the way. People try to avoid on the earnings announcement. That is why this profit taking caused the drop in Nasdaq and most of the technology counter. Ultimately, like I mentioned, we are still on the uptrend, as you can see, right? We are still on the uptrend. But if let's say the uptrend is getting too steep, what I mean by too steep, if let's say the uptrend is this way, very steep, then you got to be careful. All right, you got to be careful. So right now, let's look at the weekly chart for Nasdaq. Okay, sorry, for Nasdaq we can see that this is the crowd. We might want to take note. This is the resistance level, 16,000 to 16,700. This the once it break away, we might break out. We may see a new high for tech, especially if let's say the rate is not going to increase anymore. It's actually a good sign for technology company, right? Because like I mentioned, the debt they have to pay will be cheaper by then. All right. So ultimately, if let's say Nasdaq fall below this candle, which is 15,000, all right, you may want to be cautious. Today is 22nd July. I purposely didn't do any drawing in upfront, do together with you guys. So hopefully, you can see my, thoughts of mine when I'm doing my analysis on the charting itself. All right, so watch out if price break below 15,000. May see more downside due to profit taking or otherwise bad earnings report next week. Okay, why I say that? So back to the earning calendar. This is the week that have been announced on the earnings report, right? So do take note next week, not just on the economic calendar itself, which is heavy on the Fed. We are also entering to the big tech firm earnings report like Microsoft, Google, uh, Facebook. This kind of big company is going to announce Amazon, Mastercard, McDonald's. McDonald's is not under the tech. I mean, the previous two is under the technology, the Nasdaq. So just be cautious if you're holding, and if you do not want to trade during the earnings seasons, just stay away. All right. Otherwise, if you are holding a lot of technology company, you may want to have a small hedging position in the technology index like Nasdaq itself. All right. So this is what we will be looking out, watching on closely. If let's say things is not going to show a good sign, we may see more downside from here. Alright, breaking 15,000, then it may recover back to 14,400. I think this is the level I mentioned previously. Can't remember it's 14,003 or 14,004. Alright, but anyway, I'll just put it there and then we will look at it on the coming week. So next, we'll be paying attention on Tesla. Alright, this is what I mentioned just now. Okay, so this is very, very funny, right? Because as I mentioned, earnings is showing a good sign. All right, earnings is showing a good sign on 19 January. But subsequently after 19 January, the market kept down and then closed lower on Friday itself. So looking at the weekly candle itself, it's a very, very bearish engulfing. We can see that this candle engulfed on the last 2 weeks itself. All right, so if things going to be the same, we may see more downside for Tesla itself. Putting 300, the round figure, psychological level, as the downside, and then for people who like to use Fibonacci, you can always use this method. Just nice 300 is close to 61.8%, and then it being rejected and bounced back to the 50% Fibonacci, which is at 258. Alright, so if let's say price close below the Fibonacci level of 50%, we may see the downside to the next level, which is the 38.2, which is close to 220. Alright, so, and if that's the case, I will then write on 22nd July 2023, if close below 50% Fibo, we may see next support around 38.2%, which is around 220. Alright, so this is more on the Nasdaq Tesla playing. Alright, this is more on the Tesla playing. On the candlestick itself, we can see current candle, current weekly candle is current weekly candle form a bearish engulfing. Alright, so this is what we want to take note of. Okay, so that is my take for Tesla. But like I mentioned, since January of this year, we are actually at the upside. Alright, we are actually at the uptrend. Okay, so we may see whether it will continue to fall until this support area, which is coincide with the 38.2%, and then all the star align, we will then decide whether we should go long after that or not. Otherwise, I'm biased on the downside for Tesla. Next counter, let's take a look. KRE, remember I mentioned that way beyond. All right, 25th March, use your DCA method. Every level is for you to enter. I also mentioned in my Facebook page, I mentioned KRE. Let's take a look. Can't remember where I put in. I think I mentioned somewhere. Okay, it's here. So on the last video which I posted on 25th June, KRE, a 8% drop last week may give you a DCA investor to accumulate slowly. 25th of June. Let's take a look where is 25th of June. It's here. Alright. So this 8% drop give you an opportunity to load in. Did you follow me closely? If yes, you have been riding for the last 4 weeks of upside. 1, 2, 3, 4. And then we are hitting the 46 and close on 46.38 last week itself. Alright, so if you did follow my Facebook page closely enough, you should have picked up KRE by then. For people who did not enter KRE way before, you should be entering at the $40 zone. Alright, so congratulations for people who follow closely. People who miss out, don't be disappointed. Always wait for pullback, or if you're confident enough, you have spare bullets, you can always enter at this price. Otherwise, our first bullet is at 40, right now it's at 46. We should be all in the green territory right now. I can simply show you my percentage in my Momo account is actually in green, but I think it's not that fantastic green. That means the percentage is not a lot for me to show you guys at the moment. But I am in on this counter previously, which I mentioned, right? Because I'm doing DCA. So you should be doing as well, unless you believe the bank sector is going to fail you. Otherwise, we should buy when everyone is fearful. All right, next counter, GFAI. Okay, going to direct stop. GFAI. Can you see this? Very pretty, very nice. Let's take a look. All right, I mentioned for GFAI since many months, and then my last touch is on the 4th of June. Small cap. All right, market cap is small, super risky counter to join in, brave soul to play, first resistance $10. Last Friday or last Thursday, there's a 57%, close to 90% during the day trading, and pull back to 57% upside. And then the following day, which is on yesterday, 30% upside. So both add up, it's more than 100% add up upside since last Thursday itself. All right, so did I enter? Yes, I am one of the brave soul with some of my students. So as you can see, for oops, I tried to okay, so this is what we did. We did enter. Some enter at $5.76, which is around here. As you can see, this purple line. Some enter at $6. All right, slightly higher. Some enter at $5.39, which is also around this purple color line. And then the risk that we are taking, the maximum Dow Jones it went to is close to $4, which is maybe $2 maximum risk. And what happened? We are right now all on the upside, 45%, 56%, or close to 40%. All right, risk of $2 and upside is more than $2 right now. So first resistance is $10. If you have monitor it closely, you are one of them. If some people don't wish to ride over the weekend, you should have sell it near to $9 or near to $10, right? Or otherwise, from the weekly chart basis, all right, from the weekly chart basis, okay, ignore the image. From the weekly chart basis, we can see a very, very good volume on last week, or perhaps starting from last Thursday, 147 millions of volume, which we never see in this counter before. We may continue to see more upside for GFAI at this point of time. And where is my target? After hitting the 10, all right, after hitting the 10, we may see $13. All right, 1 second, we may see $13 as the next resistance. Okay, we may see $13 as the next resistance. I didn't draw this whole chart, I just leave it there. But I would like to do an update. So 22nd June, like July. Like I mentioned, this is a risky counter. If you have spare cash, all right, you would like to risk on, and you're on risk on, you can enter in with a small amount. All right, nipple slowly, small, because the risk on this counter is still there. All right, what causes the market to went higher? If you go and take a look, it's because I think there is a deal. AI, Force AI search on the deal with these security firms on the new robot itself. Go and read up a little bit more and understand what causes the market to go or to spike higher. So next resistance after break above 10, we may see $13. All right, buyers on upside with 147 millions volume last week. All right, so this is my buyers on the coming week for GFAI. Ultimately, yes, this is a very small cap. Ultimately, this balance sheet is not, no, it's not fantastic. Might be in the red, it's losing money, but we ride on the trend. All right, on the current market trend. There's many play. Some is safe play, some is risky play, some is anti-trend play. So it depends how you take a look on it. All right, so since I'm in the profit, I will continue to hold. I can partially sell partial of my portfolio, of my positions, and let the remaining partial to go for the bonus game. All right, so it's up to you to play on it. People, next we will move into HD. So for HD, I mentioned previously, right? Yeah, can you see? Share to private call to public, right? The weekly trend entered at 290,295. Last week closing at 320. Congratulations. It's not a very huge amount, but it's still on the green territory, right? So where are we looking at? Yes. Let's take a look. TP should be 320, 330. So right now we are 320. People who want to be more conservative, you should have TP that. People who are more risky, you can actually TP at 330. There is a resistance level there. All right. So watch out for HD. Ultimately, the good sign, earnings report is coming on the 15th August, whereby there's 2 or 3 more weeks to go. But otherwise, we are actually riding on a uptrend counter. So you are buying at the dip at the point of time, which I mentioned. I think I saw some RSI over there. You bought at the dip, you ride with the trend. Correct or not? So if you break 330, we may see more upside here. Alright, of course, bullshit breakout, we may see more upside definitely, but the good thing is that we are riding on the trend. Alright, so this is how you do on buying on the dip with a correct direction. Alright, what do I mean? Correct direction, buy on the dip. Got it? And this is what I mentioned. So if you're holding on HD at this point of time, look out for 330 break above, then we may see more upside. So just want to break above 330, we may see more upside. So advantage right on the correct uptrend, bought on the dip around 290. Right, so this is the advantage for people who ride on HD. Okay, so let's move on to Meta right now. I think this is the last second counter I'm going to share today. All right, for Meta, people who know or pay attention previously, I got stop out on this counter when I decided to stop short at this point of time. All right, trading of losing money is part and parcel. Is how you manage your portfolio, like I mentioned. All right, so right now, based on the daily chart, we can see that Meta has been on the rocket uptrend since November 2022. All right, it has been running for the solid 6 to 7 months, like I said. And at this point of time, we are right now close to the near to the 78.6% Fibonacci resistance level, and then it closed on the last 2 days itself on the downside. This level is significant. Why? Because still remember the gap down of this part. Okay, so what happening is that the price actually closed the gap. Let's zoom in a little bit more. Okay, can you see? Here is the price. The low is actually at 316. The high is actually at 318. So the price actually touches at the where we say it covered the whole gap, and right now this area become a very significant resistance. Okay, so people who want to take these chances to do some trade on Meta, do watch out. What do I mean by watch out? Is because coming week is the earnings report. All right, firstly, coming week is the earnings report. Second is a bearish engulfing at the resistance level. It's kind of like significant right now. So I will then put my arrow down for Meta, go to 61.8%, which is 270, or otherwise I may see more downside to 230 or 240. All right, so I will then write a text, 22nd July, day chart, price covered previous gap down. All right, price covered previous gap down, which happened on this is when 3rd of Feb 2022. Price resisted by 78% Fibo. Okay, bias on downside. Warning, next week earnings report. Then TP, we are looking at both 61.8% and 50% Fibo level, which is 270 slash 240. Okay, so this is what I'm looking for Meta Facebook counter. Alright, but usually when you analyze on a stock, when there's earnings report upcoming, the accuracy of it is not very accurate. Alright, but I'm just doing a speculation at this point of time, from the charting, from the couple of signals showing, and then I put on my biases for Meta. Alright, so for people who want to do a small trade on Meta, just be cautious. Alright, otherwise it's a good point to do a hedging because he has been running significantly for the last 6 to 7 months on the upside itself. Okay, so do watch out. I think that's all for this week weekly market update. There's one counter I didn't manage to share because I'm still monitoring closely. Hopefully after the earnings report, not this week earnings report, but their earnings report coming up. And if there is a good sign, then I may share on the public Telegram group by then. Alright, it's very close to the significant support level for this counter, but I'm not going to share at this video right now. Alright, keep things in suspense. Alright, so that's all for this week weekly market update. Hopefully you guys have some quick update on what's going on the market and some counter to put into your watch list and monitoring for the coming weeks. Alright, that's all for this week weekly market update. Hopefully you guys enjoy more for the next coming weeks again. Goodbye everyone. Enjoy your weekend.